Hey guys, good evening. This is Dave with Moneyology.com. Hope everyone is having a great day. Today is Wednesday, August 30th, 2017, and we're going to do a uranium sector review and provide some top picks in the sector. We did this video a couple of weeks ago, and it's been one of our most popular videos, so backed by popular demand, we're going to look at the sector which we believe is going to be one of the hottest sectors in the coming years, and we also believe, based on the URRE chart that you'll see in a moment, is on the verge of a major long-term breakout. Of course, we cannot time these breakouts to the day. That's why we use weekly charts to remove the day-to-day noise in the markets and the volatility in what's been a very volatile sector over the last couple of years. But without further ado, let's take a look at the charts on our watch list. So we'll start with the global uranium ETF URRE, and why we were so bullish on this particular sector is twofold. One is we've broken out of this major downtrend in the latter half of 2016. We've retested it from the upside. We've broken out of this bullish wedge. Now we're basing, and we're basing while all the while creating positive divergence on the RSI. We're right below that 50 on the weekly RSI. So while we have to be open to the possibility that this can break below, we believe, due to the positive divergence being developed in RSI relative to price, that we'll break out of this line within the coming weeks. And when that happens, there are going to be a huge amount of opportunities. Some of you might be momentum traders, so you might want to wait for this breakout. Others who are contrarian, you might want to start looking, if you haven't already done so, for some top names in the sector and get in early. So one of the leaders in the sector is Cameco Corp, CCJ, and what we see here is that it's creating this similar to URRE, and no surprise because it's the most heavily weighted stock in the sector. It's created positive divergence. It's consolidating right below the 50 on the weekly RSI, and price is starting to gain strength, and it's consolidating here right below the 10, but right above the 50 on the weekly Bollinger Band of 969. And so obviously we can't time it day to day, but we think that this is headed to the upside, and we'll test this 200 EMA around the $13 level in the coming weeks and months ahead. So one of the more quote-unquote safer plays in this particular sector. Denison Mines, DNN, it's been one of the more battered and bruised stocks in the sector. A lot of dilution, a lot of challenges over the last couple of years, but as you look at the MACDs, they're crossed zero here, and in our opinion, they're just waiting for that big surge. There's this RSI divergence between price, where price is near its multi-year lows, but RSI is actually gaining strength, and it's here consolidating and basing above that 40 level. We wouldn't buy this one necessarily until we see this break above that 50 level again. But once it does that, we think that, just like CCJ, we're going to see this test at 200 EMA at some point this year at 85 cents. Encore Energy Corp EU.V. Don't quite know how you buy this on the US exchange unless you have a Canadian account, but nonetheless, we really like this hammer pattern that's being developed this week. We've broken out of this downtrend. We've retested it from the upside here. If you extend this line, and if we break above this 5-cent line, we think that 10 cents is going to be hit in short order and ultimately test 15 cents this year. So a lot of upside with Encore. MACDs are curling above zero, headed towards zero, so that's definitely a positive development. Energy Fuels, UUUU, consolidating below this $2 marker, while the MACDs are actually developing some consistent strength above zero here, which is very positive development. And the RSI is just broken above that 50. That's on a weekly. That's very positive development, and no surprise that we've seen this nice move so far this week, 8% up move. But for a longer term investor, you want to see this $2 mark break to the upside to confirm this bullish development, but we believe the up move has indeed begun here. Fission Uranium Corp, FCUUF, another one of those that's been basing for basically 3 years here between 40 cents and 70 cents, and we believe now is the time that it's setting the move to break above that 70-cent marker, and once it does, probably doubles from here to that 150 point in the coming year ahead. but beautiful retest of that 50 line. It's starting to curl up higher here, and so we want to see this break above the 65 price range, 60 to 65 price range. But ultimately, if you're a value investor, good time to get in. If you're a momentum investor, you might wait till it breaks 70, but we think that long-term upside is very positive here. Lithium Americas, this is a couple of lithium stocks on this watch list. Lithium has been absolutely on fire, and this is one of those names that is very hot in the sector. As you see here, it's breaking above this multi-top zone here, and it's about to cross a 70 on the weekly RSI. Don't know the fundamentals of this company, but looks like there's much higher price action ahead with Lithium Americas. And this is the Lithium Global ETF. Those of you who followed me over the last couple of years, I pointed out this what could potentially have been a bearish wedge pattern. It should have broken down to the downside, but nope, it broke out to the upside, and now it's consolidating right below that 34 zone, and it looks very bullish here, and just a very positive development. I would be buying all the lithium companies that have good fundamentals for a long-term portfolio. NextGen Energy, one of our favorites and one that we currently own. It's been basing here in 2017 between $2 and $3 a share here, and it's right below that 50 on the weekly RSI. But we believe it's setting up for a very big move to the upside as the MACDs are curling and possibly breaking above zero in very short order. Next on the list is Mega Uranium, which is really a shell company for NextGen Energy, and we own this one as well. And it's because it's trading at a fundamental discount to the shares that it owns in NextGen Energy, and so this will do as well as NextGen, possibly higher because it's a leveraged play. But bottom line is, look at this wedge pattern. We think that this is on the verge of breaking above this 15 marker, and we believe this will hit 25 cents some point this year. So one you might want to consider picking some shares up of. Sky Harbor Resources, SYHBF. Nice basing pattern after a beautiful move in 2016, and we like this a lot above 40 cents a share, and we think that 55 cents a share will be hit. Notice it's above that 50 on the weekly RSI. MACDs are curling towards zero, and then break above that would be extremely bullish. We really like Sky Harbor both on a technical and a fundamental basis. URRE Energy, URG, beautiful hammer pattern so far this week. 10%, no surprise that it's curled above that 50 on the weekly RSI. Typically when that happens, that's when some of the biggest moves do occur. And our target for this year is 90 cents. So definitely one you want to consider owning in your portfolio. Uranium Energy, one of the better managed companies in the sector, UEC. It's been consolidating here above this trend line here. So as long as it stays above this trend line and it's hovering right above it, we still think it's a bullish chart. And for more momentum players, you want to pick the shares up as it breaks above 150 and 160. But if you're a value-oriented player, not a very good time to buy, and I wouldn't hesitate owning it so long as it's above that 120 marker. And finally on this watch list is Westwater Resources, WWR. Frankly, I'm not quite sure whether this is a uranium play or how it really got to my watch list. It very well may be, but if it is a uranium play, it's broken down out of this downtrend here, and it's consolidating right below that middle Bollinger Band on the weekly, all the while building some momentum here on the RSI. We think that once this breaks to the upside, if it does, it just presents a very nice risk reward, because the downside risk is this lower support line around 125 with an upside price target around 250. So downside 125, upside 250, like the risk reward there. And that's it for the sector. But bottom line is a lot of very interesting opportunities, a lot of significant upside should our thesis in uranium play out. So we're gonna continue to update these videos. If you have any names in the sector that you want us to look at that we haven't covered here in the watch list, send us a note. Otherwise, follow us please on StockTwits and at Twitter at Moneyology, and please subscribe to our videos and definitely reshare with your friends. Appreciate it, guys. Have yourself a great rest of the week.